Hey, Ryan here with Planet Cheapskate, and I wanted to pop on here and do a special announcement because this is very, very important news. I'm kind of giving some information about what's called a lock and shop and or lock drop and shop. These are very, very good to do right now with the current state that we're in. And let me just take a little brief moment to explain what that is, what a lock and shop is, and some of the features of it, some of the things to look out for, and then I'm going to tell you why we are kind of talking about doing these lock and shops if you're out there in the market. So, if you're in the market for a home, you want to give the lock and shops a good look. And it's very crucial to work with a broker because they're going to have the most options for you, as I'll explain a little bit later too. Me being a broker, I have more options than maybe going into a bank and a credit union. They might have some options, but they're they're going to only have one option for you, whereas I have many, many options all the way up to 270 days. But first, a lock and shop is basically where you can lock your rate before you've ever found the property. And you can lock it for a term of 30 days, 60 days, 90 days, and then in some cases all the way up to 270 days, which is 9 months. And so what these do is, and how these are utilized the best is if you have a lender who will also go ahead and just underwrite you. And so then whenever you give your pre-approval, you can actually put in a thing saying basically like, look, we're underwritten. We're completely underwritten. This is an approval. It's not a pre-approval. It's a full approval. We just have to find the property. So what basically takes place is that all your information is submitted to the lender prior to you finding the house. You lock your rate in. Now, on some of the long-term extended rate locks, you are going to be charged a fee in advance. And this is just basically determined by the lender, and it can be refunded though. If your loan does not go through, it will be refunded to you, but it's basically just kind of a deposit that you're putting down towards that. So the lender's not, extending themselves out, 6 months, 9 months, with you having no skin in the game. So know that will be required to you, but it will be something that can be reimbursed to you if your loan, happens to not go through. But so it's basically locking in your rate before there is any property found or whatever. It gives you and your realtor agent a chance to find the house out there in this market. And I'm seeing more and more banks, credit unions, other lenders coming out with these 60-day, 90-day locks, lock and shops. And that's all fine and well. I'm glad that they've acknowledged that there's a need in the market, but in this market, it's taken people 5, 6 properties. It's going to take longer than 60 days and 90 days sometimes to find a house. And so, you could find a house and then your lock expires and you have to extend that lock. And so they really need to be a little bit longer. I think a 6 month at least. 180 day, 120 day. I do have lenders that are doing 120 day. I have lenders who are doing 180 day, and I have 270 day. I have a lender who's doing a 270 day lock and shop. I have some lenders who are doing a lock drop and shop. And what that just means is that you can lock in the rate, and if any time between the time that you lock the rate in and you find the house, if the rate drops by 0.25%, then you can float down the rate. Okay, so you'll be able to float down the rate, no cost to you. And so that's also an awesome feature that you can do. Not all of them offer the drop, but some of them do. So be on the lookout also with some lenders. They're doing these lock and shops, but they're actually putting a deadline even on top. So say you have a 90-day lock and shop. Well, some lenders are saying, well, you have to find the house in 30 days or 60 days, even though you have a 90-day lock and shop. They're saying, well, you got to find the house in 30 days or it voids the lock and shop. So be on the lookout for that. If you wanted to work with me, I'm going to make sure you don't have any of those negative features where you're required to have those. So the reason why we're really pushing this lock and shop, I'm going to loosen my tie. It's a little tight. Okay. The reason why we're pushing this lock and shop so much as lenders is because part of our job to look out for your financial well-being, our fiduciary duty is always to you, is that we're looking at the Fed meet. The Fed is scheduled to meet, it looks like 6 more times. They're going to meet in May, early May, which is right around the corner. They're going to meet in June, in the middle of June, late July, September, I think early September, and then November, I think late November, and then the middle of December. So 6 more times they're meeting, and they're saying that they may raise the rates 3, 4 more times. I've heard even 5 or 6. They could raise the rates every single meeting, or they could not. They could hold off. I think they're going to maybe hold off and then maybe raise them a little bit and hold off and then raise them and do one of those things. But I don't know. Nobody can predict that. Nobody knows it except for, the Fed chairman. And so when we're looking at this and we're looking how many scheduled meetings there are for the Fed to announce their policy, and we see how many meetings there are, and then what they've indicated that they plan on doing going into 2022, we're just saying that for your financial well-being, it's going to benefit you to do one of these extended locks. Now, they are more expensive. There's a plus and minus to everything. So in lending, there's what's called a discount, and then there's also what's called a rebate. A discount is basically what you pay the lender to give you the rate that you've chosen. And this is all part of your loan costs. Now, a rebate is basically when a lender is going to give you a little bit back for taking a higher rate. And so your discount is going to be a little bit higher, which is the amount you pay the lender for the extended lock period. But in this case, we've determined that it's probably worth it to go ahead and do that extended lock. So if you're one of my realtors out there in Kansas, reach out to me. We can schedule a coffee. We can schedule a tea, something where I can tell you a little bit more about it, to where you can protect your buyers out there. If you're a subscriber, if you're a watcher out there and you're going through this process, ask your loan officer about it. If they don't offer it, you may want to just shop around and try to find a broker. I'm 100% positive brokers are going to be able to offer this. And so, I've always been an advocate for brokers over a banker. Love bankers. I go to banks for my, checking, savings accounts, auto loans, all that. But when it comes to a mortgage, brokers are better. So that's all I got to say. Wanted to check on the time a little bit. It looks like we're doing good on time. I try to keep these between 5 to 8 minutes just because, I don't want to take too much time. But this is very, very important. If you're a realtor partner of mine out there, again, let me know and I can give you all the 411 on it. And let's see, anything else I got to cover? I think we're good. Again, just a special announcement I wanted to pop on here and just let you know it's probably a very good idea to look at a lock and shop or a lock drop and shop option. And I'll see you guys Friday for the rate update. Take care.